The dollar continues to weaken in the markets in today's trade. We've seen a real march lower for the US dollar. I'll show you the chart here for what's going on with the dollar basket, which you can see quite clearly. This is the basket of currencies against the US dollar. The dollar down in the last couple of days. It's broken that line of support at 101.47. It's on its way now down to the lows we saw back on the 14th of April at 100.37. In the longer term picture, you can see that once it breaks this level here, lower than where we are, the next line of support goes down to 97.68. In amongst some of the other moves that we've seen in the markets, this is sterling trading up against that weaker US dollar. Now not too far away from the 130 level. We've been talking a lot about this recently. And once it crowns that, I think then there's further potential upside to go. The headline consumer price index in the States is expected to decelerate to 3.1% in June year on year, down from 4% in May. Core CPI growth is also expected to slow to 5% after a 5.3% print in May. Now, since March, the headline US CPI figure, the Consumer Price Index, points below core inflation. Energy prices have substantially fallen, but broad-based inflation seems more stubborn. The real big trade around the release later on today will be this. This is the euro trading against the dollar, the euro rising against that weaker US dollar. In yesterday's session, we rose to, but didn't quite close beyond the 110.12 level, which was the previous line of resistance. It has now got an entire candle above that, and we are now trading there at levels not seen pretty much since the beginning of May this year. So euro dollar would seem to be the way to trade this. Long euros against the US dollar. If you are long on this on a day trade basis, your stop goes below the 110 level.